Hey guys, welcome back. Drip and Farm for Poppy. I'm your host, Drip Coach, dropping knowledge bombs on all drip ecosystem related projects. And today's video, it's true, I have a true fiat Ponzi exposed. Going to be digging into the numbers and the data to back all this up, so you're going to want to stay tuned. But first, I'm going to show you just the numbers up front and then show you what this Ponzi actually is and who it affects. So you might be surprised. So first, let's take a look, and you guys would agree by the numbers how sustainable this actually is. So let's just say you had 176 people doing something that generated $1 million in fees or revenue, right? Simple to understand. 176 people, they're doing something, and then whatever they're doing causes $1 million in revenue over the course of a year to be collected or generated. Fees, revenue, whatever you want to call it. Now, let's say in that same exact year, you paid out $1,060,000 to 65 people. So remember, it took you 176 to get $1 million, but you paid out more than that to less than half in the same year. So it doesn't take a rocket scientist to figure out that that's probably not sustainable, right? 176 people to generate 1 million, and then you spend more than $1 million to only pay 65 people. And these are not the same people. So this 176 that contributed to this revenue is not part of the 65. This is actually a separate 65. These 65 people actually are getting paid, and they were in the platform before these people came in. So these are technically new investors that are not accounted for in this equation. So that would definitely look very unsustainable, right? Well, let's also go a little bit further into a projection. What if you had 65 people in 2020, and then in 10 years, it's forecasted there'll be 78 people. These are the payout, not the number of people to sustain it, just the people that are getting paid out. And then in 2030, it'd be 78 people. And then by 2040, it'd be 94 people. So remember, it's less than half that are receiving these rewards. And these are not part of the original ones that went in. And this number is going to continue to get bigger. 65, 78, 94. And those are still not the ones contributing to this part of the pie. Now, also, I don't have the numbers for this, but let's imagine that this number is also going down, right? Meaning there's less people actually getting in the platform, less people contributing to this amount. So while this number is going up, this number is going down. So I don't think, again, you need to be a rocket scientist to understand that that's probably not sustainable. Now, what is this Ponzi you're thinking of? Well, I'm going to tell you. It has absolutely nothing to do with DeFi and cryptocurrency. It's actually our traditional system. That system I am referring to is the Social Security system of the USA. So those numbers have come straight from here. It's from 2020. Reference the actual reported numbers from our Social Security Administration. So that's the transparent figures. But instead of it being 1 million, dollars, it was 1 trillion. So I just simplified it so that it'd be easier for you guys to digest. And it's already gotten worse. But the numbers that I pulled up was from 2020. And then I saw this later for 2021. So what this actually represented was $1 trillion and 176 million people and 65 million people. Now, for those of you that are not aware of what Social Security is a system in the United States that provides financial assistance to people who have retired, become disabled, or lost a family member who was a breadwinner. It's funded by the taxes that people pay on their income. When you start working, a portion of your paycheck goes towards Social Security. Now, it's important to note that Social Security benefits are not means tested, meaning that anyone who has paid into the system is eligible to receive benefits regardless of their income or wealth. Meaning, if you are financially well off at the age of retirement, you're still eligible. So that means that this system is 100% not sustainable. And the reason I brought up that example here about 176 is because there are less and less people going into the traditional workspace. So So remember, this is collected off your taxes, but what about people that are doing like freelance work, getting paid in crypto, working overseas like myself, finding ways to circumnavigate some of the traditional means of getting your assets taxed into oblivion? So this number is getting less and less. And then not to mention, is going to become an exponentially larger problem with the number of Social Security expected to increase as the baby boomer generation retires. So they're retiring now, and there's still many more to come, because some of them actually are still working because of this problem. So the reason I brought this up is because we always see that they call DeFi and crypto, and specifically the drip network, a Ponzi. But at least we have on-chain metrics to see what's happening, and we are technically in control as part of the drip community, meaning all we need to do is add utility. You can't add utility to this. This is a system that is just broken by design, not to mention the money they're paying out. If they don't have it, they just make more of it to pay it out. So not only is it not sustainable in and of itself, they're going to continue to make more of it and inflate it, and then just devalue its buying power. Now, one could argue, of course, with drip that if the drip network Faucet doesn't have the tokens, it will indeed inflate that and deflate your buying power. I'm not going to disagree with that at all, but we have the power to change that around as a community, and we can start to utilize crypto as a means of exchange amongst our community and not use this at all. So you can think of drip as being the Fed money printer that is set at a fixed rate. It doesn't change. You know, the Fed can decide to change their rate and make more or less in a short time period. So we got the drip network money printer, and it's set in stone. So all we have to do to ensure that it's sustainable is just find more ways to offset that naturally built in inflation. So it's a feature, not a bug. You want something that has a fixed way of being provided value, and then it's only on your side that you have to decide or learn or implement how to offset that. And that's exactly what the community is doing with all of these projects, brick by brick. Hellhounds, the Guardians of the Reservoir, Foodtopian, DeFi Crypto Boss doing the drip blackjack, myself, Change 360, all sorts of stuff, right? So we find more and more ways to buy up that circulating supply. Triple D coming out, then this money printer that we have with a 1% inflation that by itself, yes, is not sustainable, but the community has the ability to create that sustainability. And of course, onboarding more people to utilize it is a very, very easy way. Unfortunately, with the US dollar, it's actually going the opposite. Less and less people want to use it, like the video I showed you with bricks. So this is just a way to wrap your head around what is happening on a macro and not get so caught up in the price, and realize that this is just a battle we have to win, or we will win within crypto. And it's one we have to win within ourselves, of fighting for what matters and steadying the course. So hope that provided some value. Hopefully you have found another way to supplement your income and not just Social Security. If you're in DeFi, I know you have, and that's specifically for our US. Let me know for my global people if there's a similar system somewhere else. But 100% Social Security system is a dying Ponzi. All right, that's all I got for this video. Hope it provided value. If it did, smash that HBO special. Help brother out. Like, subscribe, comment down below. And until next time, lift daily and achieve your impossible.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Sprix Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.